I'm live，OK、然后等一下，我先全资讯过来。Warning, please check the.
今天 Go Live 没有用，好像看不到后面。
啊？现在已经 Go Live 了，可是你看到吗？哦，
假装它 Go Live。
你刷新有东西吗？有，好，这边东西有出来，声音也听得见。好。
所以如果 Dominick 进来 Zoom 考的话，他会。
你要 Dominick 进来 Zoom call 的时候 ，Dominick 要出现在荧幕上吗？
对。可以吧？
应该可以，但我是不是要先 approve 他？等一下哦，然后我这边。跟 Dominick 还没上线。
我是说，他如果临时加进来的话，他可以，
那他可以应该
直接切到。
对，但我这边必须要调那个，好，现在快4点了，
已经 Go Live 喽，
已经 Go Live 了，所以我们现在讲话上面都听得见。你好，这是你。OK， Hello， 你好，
看得到我的脸吗？
看得到你的脸吗？你的脸，需要有在这里。Resolution。好。画面的话，画面长这个样子。我应该旁边修一个。
然后等下参考歌走着。
对。
对。我们先介绍一下。
对，我先介绍一下。
目前画面，我觉得我放一个画面在这里。然后这样大家就看到，实际上，不过它会按掉。
现在看到一张。Perfect。
那我应该把它换来这里。
开场，让我开场吧。
等一下，这声音都听得到嘛？对不对 ？OK。要帮你放大吗？
我现在有点找不到。
对。我先帮你放大好了。OK。
Hello. Welcome to Taipei Ethereum Meetup YouTube channel. We are having this online event right now. We just went live. My name is Yaxing. Welcome to Taipei Ethereum Meetup online event today. It's September 24th, Thursday afternoon in Taiwan right now. I'm really happy to be here and delighted to see everyone here. So we have very special guests today. I'm going to introduce a bit about Taipei Ethereum Meetup first before I introduce our speakers. So Taipei Ethereum Meetup Group is a local developer-focused group in Taiwan. The group started in April 2016 with less than a dozen people. And then we grew pretty critically over the past 4 years from 10 people to 1,000 people. Last year, we had organized a 2-day Ethereum conference event called Crosslink. So the Crosslink Taiwan Ethereum conference event drew some 300 developers, builders, and business marketing professionals in the blockchain space. So hosting online meetups is something we would like to try this year. So in May, we had Mikera, a blockchain researcher from Toronto, Canada. She gave a talk on Ethereum access privacy at one of our first online meetup events this year. And we had Cayman, who joined us remotely from Dallas, Texas, USA. He's the Lodestar tech lead whom I met at ECC Paris this year. Cayman was with us in July, and he did a few demos on several web tools built using Lodestar, also introduced how they fit together in the larger ETH2 universe. So that was in July. So I'm really excited that we are doing this again in September. So for today's meetup, I'm going to introduce our speaker. So we are very, very excited to have Temple Yanwen Feng. He's the co-founder and CEO of Perpetual Protocol. Perpetual Protocol is a blockchain startup company that has been building decentralized perpetual contract protocol. They have offices in Taiwan and the US. And what's unique about it is they've designed a special component, what they termed as virtual vAMM. So virtual automated market makers on top of Ethereum. So before Perpetual Protocol, Yanwen led the project called Decor. Decor started in 2018, and it was an accounting software as a service for crypto companies. In 2019, Decor became part of the Binance Labs incubation program. And before his crypto adventures, Yanwen was one of the most successful internet entrepreneurs in Taiwan. He previously founded a number of consumer-facing startups, such as QB messaging app and Will mobile stock trading app. So I met Yanwen. He's with me right now. I met him briefly 2 years ago in 2018 at one of the local meetups in Taiwan. And it's a real pleasure to reconnect and have Yanwen with us. So in this session, he's going to speak about DeFi, decentralized finance, Perpetual Protocol, his latest DeFi project, and discuss a bit about vAMMs, automated market makers, what is it, and like how it has evolved in recent years, and more specifically on Perpetual Protocol's vAMM model, how it works, and what's unique about it. So, Yanwen, take it away.
Okay. Hi everyone. Thanks for joining us in Taipei Ethereum Meetup. So today I want to go through the vAMM and the virtual vAMM that we built for the Perpetual Protocol. Okay. Let's go there. Okay, all right, so yeah, let me continue. Okay, so I think that I've been in crypto stuff from 2017. I think compared to lots of other people, it's a bit late, but I've been staying in the DeFi field since then. We actually want to do a derivative protocol in 2018, but I think at the time, the word DeFi, people are now using DeFi to reference decentralized finance. So I think that, and the market crash, so we didn't really get any traction. But since then, I think DeFi kind of pick up, start from 2019 and then 2020 this year. So I think the main reason that DeFi picking up is because of the vAMM. So that's actually the talk that I want to give. That just go through all the different vAMMs and then what's the innovation between all this. So I think the first thing is decentralized finance. I don't think that I need to go into too much detail on this, but I want to mention that to be a composable or provide composability is the I mean like the real innovation in the DeFi space. So most of the protocol we can combine. I mean like Perpetual protocol we use like balancer, we use like other protocol trying to build another layer on top of others. So I think that's really powerful. So this is just the growth of DeFi. I think that everyone knows that actually it's I think the total TVL is like 10 billion right now. So I think the slice is made in May actually. So it's like 4 months ago. So yeah, it's pretty amazing that the growth is just like I mean like it's just like crazy. Yeah. So lots of people. I mean like so there are lots of funds in DeFi right now. Why the growth is like I mean like is much better than other fields. I think one of the reasons is that the automated market maker actually found a place. So I think back in like 2000, there are several research or like automated market maker used in like prediction market or other like probably like more like smaller financial instrument. But I think like on crypto or on DeFi is the first time that the automated market maker really find its place. So what is an automated market maker? Is an algorithm-based market maker that provide liquidity to the market. I think the key of this is that it's a pool liquidity from the liquidity provider. So everyone can provide liquidity to the automated market maker. In traditional financial market, there are lots of people doing market making, or like there are lots of market making firm, but most of them are proprietary. I mean, you can. I mean, of course, you can probably be the. I mean, like a LP to those like funds, but it's not open to public. Automated market maker is the first. I mean, it's the first time that general public or retailers can provide their liquidity to the market maker, and then by using that, by using an algorithm-based model, it will automatically try to find the best price. So I think that's really very powerful. Automated market maker is also the counterparty of all the trades. So it's very different. I mean, most of the automated market maker is itself is a DEX. So it's very different from the order book model that maybe like centralized exchange or like traditional finance use. So you will always, I mean, the price will be predictable and so it will be predictable. So you know when you make an order what the slippage is. Before that, I mean, like it's not really. I mean, when the market goes bad, it's not like order book. The market maker can just like pull order away, and then you just have a big drop. The automated market maker will always, I mean, based on that algorithm and perform that. So I think that's really an interesting way to solve this. So if you are writing a program or like using software to access the automated market maker, is always predictable, and then it's very easy to build on top of that. Because if you, I think if you, the order size is not big, you can just like always like go to like Uniswap. Uniswap is one of like the biggest automated market maker DEX. So you can always go to, like us, we always go to like Balancer or Uniswap. We just make the trade. We don't really think about that is the price fair or something. You trust that mechanism. I think that's really cool. Yeah. The last thing is that if you have an automated market maker, it's very easy to create a new market. So on central exchange, people needs to kind of like they have like certain mechanism to maybe like review, or like when they want to introduce a new market, they have to review they have to like maybe you have to pay to be listed on the centralized exchange, but on decentralized exchange, especially on automatic market maker, I mean kind of like DEX, you can just go in and create your own market. I think that's really powerful. Okay, so this is just a comparison that between the order book model and the AAM model. When I was in, I mean like in crypto like 2017 or 18, at that time actually people are building the order book. I mean, so IGEX, which is still doing well right now, but they start at that time is order book model. There was Ether Delta, it's not there anymore, but it's also an on-chain order book model. Order book, I mean, it used to be order book, but compared to centralized exchange, on-chain order book DEX doesn't really have any advantage. Until like 2019, Uniswap started to pick up. I mean, AAM model has an edge on like centralized exchange. It doesn't mean that Uniswap provide like the best slippage or anything like that. It compete in different ways. On Uniswap, you can create your own market. I think that's very important. The second thing is that it's really predictable, and then you can build on top of that. It's really composable. So start from like spot trading. So Uniswap right now is much bigger than IGEX. If you look at like lending protocols, Compound Aave is much bigger than DAMA. Actually, DAMA is not there anymore. DAMA was a P2P protocol, but it's I mean like the pool model, liquidity pool model, is really like 10 times better than a P2P model. Synthetics, a pool model, wins over UMA as well, I think, yeah. And also like we are working on the future swap space, and then I think having an AM in perpetual or futures or like options or other derivatives is really an advantage, and then it's also more suitable for the DeFi space. Yeah, so let me just like go through like different automatic market maker. So we briefly talk about Uniswap. I think everyone knows about Uniswap. So I just like this is just a high level overview, but I just want to walk through this. So Uniswap launched in 2018. Yep, and it's I think it's not the first one. The first one, like the most well-known one, is Banker, but Banker actually raised a lot of funds from ICO, but it's will be like the gas fee is high and really doesn't really find a place. I mean, in the DeFi world, but the Uniswap is very easy to understand. So actually, it picked up in like 2019. So how Uniswap works is that it has a constant product curve. So it uses a constant product formula, x multiplied by y equal to k. So like example on the right hand side, if you look at this graph, so we have like two pools, x and y. X is DAI, y is ETH. So if you want to, I mean, exchange DAI for ETH, you just put in DAI in the DAI pool, and then X increase, so Y has to be decreased. So you take something out from the Y pool. So it's very easy to understand. Below that, there is a graph. So it's actually just the constant product curve. So it's priced to infinity. So I mean, you cannot drain the pool. So there will always be something in the X pool or Y pool. So it's really, I mean, it's really easy to use because I mean there is no restriction on the price. So Uniswap is right now is I think the top one DEX on Ethereum. I think it's like 60-70% of the usage. So it's really huge just by a very simple, mechanism. So Uniswap picked up, I think, like in 2019, and then there are a lot of variation. So people see Uniswap is like very interesting. So you can build on top of that. But there's a thing. So if people can provide liquidity to Uniswap, but once the liquidity is not, really like a high number, people suffer from big slippage, which means that if you want to exchange tokens, the more you want to, the more the older is, the more the slippage is. Means that you will get less, tokens if you want to submit a large order. So I think that's something that a lot of people trying to fix, and Curve is one of them. So Curve launched in 2019 is an AMM for scalable asset, which means you can only exchange like DAI to USDC, this kind of like stablecoin, or like WBTC or RENBTC that also a synthetic asset from BTC. Because the price between these assets doesn't really change that much, so they can kind of like redesign the curve, like the graph under. So they kind of like so the purple dark line is the Uniswap, the constant product curve we showed like in last slide. The blue one is actually the curve, the curve, yeah, the curve formula. So it actually tried to make it more flat, at the kind of like at x, at x equal to y, something like that. So which means that if you exchange like DAI to USDC, the slippage is really slow. You can, kind of like have an algorithm that make it really slow, really small. So it's really good for stable coin asset exchange. So Curve is doing really well. I think their TVL is over $1 billion. So they only pick a small use, special usage, but they are doing really well. So Balancer launched in 2020. So it's a new one. So Balancer is doesn't really go to like special use case. It actually generates the AAM. So it like Uniswap, you can have two assets, and the weight between the two assets is 50%, 50-50. But in Balancer, you can have more than two assets, and you can kind of like customize the weight. So like ETH DAI pool, for example, in our Uniswap example, it's like x times y equal to k. But here it's a little bit different. You can assign a weight to different pool, to these two pools. So like here, we can assign the DAI to like 20%, and then ETH to like 80%, which means in this pool there are more ETH than DAI. So the slippage is different. There will be like more slippage, but the impermanent loss will be less. So it's actually by trying to customize the weights, you get different effect. So if you try to launch a new token, you probably can increase the weight of your own token because you got more of those tokens. But you can still you can still build a pool by that. So I think there are a lot of interesting usage for Balancer. Balancer is like second largest AIM right now. So it's really cool. Yeah, and there is also another one. So Banker used to be the first AAM on chain, but it kind of like it doesn't really become popular after like Uniswap. But they have this like banker V2. So V2 launched this year. It's actually very interesting. So you can it's the same. So you have like a pool, so X and Y pool on the right hand side, but they use a price to feed, use a price feed to adjust the weight. So it kind of like if the price change. Okay, so if the price change, actually they change the weight of the pool. So which means that the pool can the slippage will be less for the traders because the slippage is not in Uniswap, if you want to adjust the price, arbitrager will help you do that because arbitrager they see an opportunity between the Uniswap pool and also like other DEX or centralized exchange. But here, if you use a price feed to adjust the pool weight, then the slippage will be less because there is less opportunity for arbitragers. So I think this is really for this year there are a lot of new AMM, and Banker V2 is kind of like the first one to introduce a price fee to the AMM. So I think that's really interesting. So I think we will see a lot of like new innovation in this space. Yep. So I think that's I try to cover more like AMM, but that's I say for now I go through like several different ones. For the AMM, I think it's because we also kind of like design our own AMM. I think that it actually opened up a new possibility for engineers. So in traditional, I used to work in traditional financial companies, and if you want to use, if you work there, you can, of course, you can design, new financial instrument, but I think it's not really like the new AMM on DeFi, because it's actually very simple. Like Uniswap, they just use the constant power formula, but it also have a lot of different possibilities. So if you are very good at math or financial engineering, actually, there are lots of things that you can do on DeFi space. Like trick the, if you look at a curve, they just trick the curve from Uniswap. If you look at balancer, it kind of generalize the idea. From 2D to 3D or 4D. There are lots of different possibilities if you want to build on top of DeFi. So I think the innovation will keep going on for several years, at least on the AM side. So I think that's really interesting. If you are interested in the math or financial engineering, you should try. It's the best time to try, I would say. So above, I kind of touch most of the AM right now on the market, and we Perpetual Protocol, we kind of doing this in a very different way. So most of the AM, they try to build up a new formula, and I think for us, we actually try to. So we are the financial instrument we are working on is the Perpetual Contract. Perpetual Contract is very different from spot market. It's kind of people trade against trade against each other and form a contract. So because of this very different nature, so we actually can design AM that provide more kind of leverage, but scale using the same formula. So I think that's what we did. So like here, so we can just like enlarge the leverage. So kind of like if you put in like one die, we actually you can use it like 10x. So 10 die in the pool, something like that. Yep. So it's just a quick walkthrough, like how we do this. But I think I just focus on the virtual AM part. So like I said before, you can kind of like you can make change to the curves. But the other way to do this is that you can maybe think about like us. We actually, I think the key is that we don't really put the tokens in the pool. So we like here, if you look at the virtual AM, we have this XY pool is also X times Y equal to K. So the same constant product formula. But I think the key is that we don't really put the token in the pool. It sounds really simple thing to do, but it actually, once we virtualize the pool, we can have leverage. I mean, because we virtualize that, we can have leverage. We can have like long and short. But at the same time, if we can have another system, try to make sure we always have enough capital to pay back everyone, then I think that's actually a new kind of usage of vAMMs. So that's actually how we do this. Let me walk you through like a quick example. So there's a trader, Alice. She wants to put in 100 USDC 2x leverage. So in traditional ways, I mean, Uniswap, you just put that USDC in the Y pool, and then you kind of like trade. But in this case, because she wants to have like 2x leverage, we don't really have like 200 USDC. We cannot do that. So how we do this is we put 100 USDC in the vault first, and then we took 200 in the Y pool, and this is just numbers, so it's virtual numbers. So we have like example below. So suppose that initially the X pool is 100, Y pool is like 10K. 10,000. So we put 200 in the Y pool, and then we can take something out from the X pool, which means Alice now has like 1.97 long positions. So it actually just works like that. But we do have a promise that the vault will always have enough capital to pay back all the traders. Why is that? Is because we use a constant product curve. So there is a property of that is the path independence. So no matter how the price go up and down, if you go back to the initial state, the vault will always be zero, be empty, which means that you will always have something there or empty. You will never go to negative. So I think that's how we designed this. Yep. All right, so I think that's actually all my talk. I know this is kind of like very brief, and then just like have high level go through everything. But if you have any question, please ask me after.
So I have a question right now.
Okay.
So a computer science PhD student from Cornell asked about vAMM. So he asked, what's the trickiest part when implementing vAMM? And what suggestion you will give to a developer who is implementing vAMM? What's your take on this?
What's the trickiest part? I think that's a good question. This is there are lots of details that it doesn't. I mean, it sounds good, but there are lots of like things that I don't really go into that detail. I think the first question, I think the most confusing part is that how do we set the initial state? So if you look at this, I mean, like I just put some number there. So I can also put like X pool, like like a million and white pool like a billion, right? So I can put that because it's virtual numbers, so I can put any number. So what's the difference? I think that it actually costs. I mean, like take us lots of time to think about this, and we don't really have a solution for this. But let me put it this way: the larger the k, so the larger the x and y means the larger the k. The larger the k, the less the slippage, which is really good to the trader. But it also, but if we increase that number to a really high number, it actually hurt the system because I mean we need arbitrageurs to move the price to try kind of like make our price the same. I mean like as close to like Oracle price or other DEX or centralized exchange price. If we increase that to a very big numbers, then they might not be able to do this because they don't have enough fund. So we need to find kind of like a number in between. So I think that we don't really have an algorithm for that. So I think that's the most
tricky part.
Yeah, kind of like I would not say it's tricky. We just don't really figure that out yet. That's just something come out of my mind. But when we implement this, we have lots of questions because I think we are the first one to do this. So personally, there are something that we know the answer, but something we don't like this. But so if you are working on something that's similar or you have your own idea, I think there will be lots of details that actually you can now learn from other places. So you have to go with it, I think. Yeah.
And the other question was, do you have any suggestions that you would give for developers? Because I think the question was coming from the computer science student. So he's also doing like blockchain engineer at the same time. And if this person wants to implement vAMM, and what kind of suggestions that you would give, like how to start or like
how to start.
Or some of the tips that you offer.
I think it's actually easy. You should be able to do this. Sorry, I don't really have like a good suggestion. I think once you get onto it, I think you can. I mean, like I said, you will have like something you don't really understand or something that's very easy, and then you can. It's very like straightforward, so you can go ahead and implement that. So I think we took like several months to do this, and I think most of the part is that we actually found like different ways to do this. So we spend lots of time. I mean, like debating on like different ways and which one is better or something like that. Yeah.
I have another question. So the question was regarding the layer 2 solutions. What are some of your layer 2 candidates, and what are the pros that, especially compared to other L2 solutions? How are they different, and like what are the metrics that you choose them, and like and like why are these pros can help the protocol?
Yeah. Okay. So maybe I will give a link. I mean in the chat after. So but we do have like survey, so it's on our forum. So we post like all the comparison we have. It's just like brief comparison, but I think the key is that there are not a lot of solutions you can use right now. So I mean, in the end of that survey, I think the only thing that we can use right now is XDAI and the Matic. We want to, so why is that? Is because we want to maintain, okay, so we want to make sure our users scale on Ethereum. I mean, scale, I think Ethereum has the most, asset on chain. So we don't want, so like, for example, you can actually build on like Binance Smart Chain, but you have to ask your user to deposit their asset to the Binance Smart Chain. How they do that? Go to Binance. I think that's, of course, one of the way, but that's definitely not the thing we will do. So we want to make sure there is a bridge running between the layer 1 and the layer 2. So if we take that into consideration, I think only XDAI and Magic is have that working right now. Others, I mean, like either they have prototype or, I mean, it's not like people using that every day. So, so we are working on these two right now, and I think after like 3 or 4 months, things will be very different because there are more like layer 2 solutions. But at least right now, I think these two are the most, I think, I mean, at least people are using. I mean, like production ones.
So I saw the last slide. If we can go to the last slide.
Sure.
Are you guys hiring? Like, are you still looking for engineers?
Yes. Yeah, so we look for engineers, and we also looking for like a marketing, kind of crypto marketing like person. So yeah, if you are interested in DeFi, especially in like new financial instrument like perpetual swap or perpetual contract or like other derivative like options, I mean, yeah, feel free to contact me. Yeah.
Make sure you contact Feng Yanwen and Temple. So thanks very much.
No problem.
Yeah, I'm going to make adjustments to our Zoom call because we need some adjustments right now. And before we introduce the second speaker, Dominick, so the Zoom call will need another.
Yeah, I sent
because I saw like there's like a
link to everyone. So
yeah. So we're gonna quickly adjust it right now.
Yeah. And let me start a new meeting. And then invite presentation link. And then to the program.
So setting up this one.
Yeah. And then make sure everybody joins.
So this one.
And then we the result capture.
So I'm giving my Cornell friend the new Zoom call.
Yes. Don't connect. Hi, Dominic.
Hello.
Can you hear us?
Yeah. So we're just going to check whether the YouTube live stream is getting the quality that we would like to have. So while we set up, so we're gonna use Dominick's screen because he has the slides.
Yeah. Dominic, can you speak something?
Yeah, can you?
Yeah, sure.
Sure. Just
Can you
make
turn
sure.
up the pitch?
Share my screen.
Yeah.
Does it work?
Wait. I need to turn. Can you turn on your volume?
Do you think you turn up your volume a bit?
Yeah, sure. Just a sec. Probably increase my microphone volume. Just,
Yeah, so I'm
suspected.
going to introduce Dominick right now.
Yeah.
So today at Taipei Ethereum Meetup online event, we are very, very excited to have Dominick Letts, the co-founder and CTO at Diode. Before Diode, Dominick worked as a tech lead of IoT cloud platforms at Exosite and worked at Nokia before Exosite. Dominick had lived in Taiwan for about 7 years. He enjoyed being part of the developers communities in Taiwan a lot, especially the open source developers communities. He moved back to Berlin, Germany last year, but is still very much in touch with the Taiwan developers communities. So a few words about Diode. I'm going to say it right now. So it's an American blockchain startup company. Dominic is laughing right now because this is the company I work for. So the company founded by Hans Rempel and Dominick Latz about 2 years ago in 2018, with offices in Taipei, Taiwan, and Berlin, Germany. Diode is a blockchain designed for IoT devices. The vision is to see a thriving worldwide network operating on fully decentralized infrastructure. So today we're very excited to have Dominick. He's going to speak about Ethereum governance, specifically on the topic of ETH 1559. Is one of the hottest topics right now in the blockchain space. So Dominick, take it away.
Sure, I'm happy to. I'm not sure whether people can see my video, but I can see on YouTube there's for sure the screen. I just want to probably talk about the talk we just had. I think that was really good and related, because I was trying to do some of the DeFi stuff as well when the craze was there and people were trying to make all the money on the arbitrages, and I saw like you make a flash loan from the IBX and then you take that money and you put it to Curve FI, and then from there you trade on Uniswap and you trade back and you try to make this arbitrage. And then I saw this is all awesome, but the gas costs just exploded because everybody was trying to do exactly the same thing at the same time on the Ethereum network.
Yeah.
So now we're in the situation where the gas cost is like crazy high. And I think in this environment is when the EIP 1559 was created. And it's trying to address some of these issues, and I want to talk about that. So the one thing I think that the biggest misunderstanding and maybe also mishope that I'm also hoping for, but it's not actually happening, is that this EIP 1559 is not going to fix the high prices. The guy here and highlighting this video is from Team Bagel, who's development. And that is actually, I think, the biggest misunderstanding we have about EIP 1559. So if it's not doing that, then what is it doing other than, right? So let's dig into the details on what this EIP is doing, what's good about it, and what might be questionable about it. This is actually a little bit like a slide about what we do, but Yashin already talked about that. So if you check Diode, we're doing a data client for Ethereum. I think that's like the one thing you should take away from this. If you're curious about what we do, check that out. And as Yashin said, we have German Berlin. But let's look at this and comment. Let's talk about here. So,
so how can you hear now?
Yeah, sorry.
Hey, Dominick, we're gonna slightly adjust your audio right now.
Yeah.
So do you mind if what would you like him to do?
Just pause for 10 seconds.
So just pause for a bit, and we're gonna adjust the settings right now.
Okay.
现在要设的是 audio. Okay. So we're gonna fix the output volume.
You want me to increase my input volume a bit more?
他的吗？他的也需要吗？
关掉这一页，回去 OBS。我的直觉觉得这样可以了，尽快去这样的。
Yeah.
So I think we can continue. Yes.
Sorry.
Sorry for interruption. But go ahead. The EIP 1559. Yeah.
Okay, then let's continue.
Yeah.
So this is actually like the starting of the EIP 159, and this is what Vitalik said in March 2019. And the goal of this EIP is to fix volatility of the prices in the gas price. So it might be that within a single block we have very high differences in gas prices what different people pay, and that is especially with DeFi even stronger because people try to get in front of each other, right? So if you're making a trade, you want to be having your trade before somebody else is making the trade and changing prices, and so that leads to even higher volatility. Also, we have very high delays often for users that are not strictly corresponding to the gas prices. And then the way the auction works is pretty inefficient. And over time, there's a belief that blockchains that only have a transaction reward will be less secure. And there's a paper about that, and we're going to dive into that point a bit more in the slides here. So let's talk about this good side of that and look at the improvements to like the current problems. So this one here is a demand cycle on gas. So you can see over one day how the price for gas goes up and then goes down. And that is hour by hour, but it's also block by block. We have huge differences, and even within a single block. And that is like a quote I took here from below. Even within a single block, we're often seeing differences that are usually between 1 to 3, like somebody's paying 3 times the gas price you're paying, but up to like 1 to 10. So that in the same block, we have some transactions that pay 10 times as much gas for the same kind of work. And so this volatility is extremely high, and often people overpay quite a lot. And then you have these peaks, like in the middle here, we have like a very strong peak where people just overpay. I've put links most in the slides, and I'm assuming we're going to distribute the slides afterwards so you can follow up and a bit more into some of that. So let's see what EIP 1559 does. So the idea of EIP 1559 is to split up a transaction into two pieces, basically. So today, transactions only have one piece of their gas fee, and that whole gas fee, so that's the gray part here, is being submitted to the miner. Now with EIP 1559, that gas fee will actually be split in two pieces. One is the tip that still goes to the miner. The other part is what we call the base fee, and that is being burned. So it completely goes away. It doesn't go anywhere else, it's just being burned, the money is gone. And at the same time, we're increasing the total size of a single block. So we're saying we take the base fee, we take the tip, and we also allow blocks actually to have more capacity. So today the capacity pre-EIP 1559 is 10 million gas, and it's going to be twice of that with EIP 1559. And the idea here is to say, like, the goal is actually still what we have today, but we have some capacity, some extra capacity to see, oh, there's more transactions today, and we can process. And if that happens, if we get like 11 million, 12 million, up to 20 million, then we always increase the base fee. So the base fee becomes kind of a penalty, an increased price on each transaction. So that if we see for a long time, like 20 million gas blocks, the base fee just shoots up. And on the other hand, if we see like very small blocks below the 10 million, that's our target, the base fee goes down, down, down. And so gas prices can become cheaper. And so this is how this might look. So we have like, if we have like 4 blocks that are completely full, like they have 12 million gas, so they're up to the maximum capacity with EIP 1559. Then we would see from one block to the next block that the base fee that is being burned increases. And so if we would pay, like in this example, would pay the same total fee, actually the tip would go down. And so we see the ratio between the tip and the base fee goes down. Whether it's going to be like this, or whether the tip has to be always added on top and it's going to be just bigger, we don't know yet. We will see that. And that's a really important topic. It's called the equilibrium. And we're going to also talk about that in a second. So the improvement with this base fee, so why this? It seems like we're burning money. Why do we do that? And the improvement with this is that the base fee will actually be a really good curve for wallets and for people who want to transmit transactions to take as a reference. So you look at the base fee, and you know, well, I have to, if I want my transaction to go through, I have to pay the base fee plus some tip. And the tip most likely is going to be some static amount, some way, maybe some nano ETH that you're going to send, and that's going to the miner. But the base fee, you just copy what right now is a base fee. And because the base fee is limited in its growth from one block to another, it's going to be a smooth curve. It's a maximum of 12% change from one block to the next. And so this is really great because it makes predicting and trying to figure out like what gas should I spend much easier. And that leads to the second point, which is because we have this really good guidance, we're going to overpay much less gas because we don't have to just multiply it by something. We can just take the base fee and add some consequent profit. Then also an obvious improvement, we will get much larger blocks. So actually the throughput we can have in the network can be much higher. And we also hope that we will see less gas price manipulation. And so that's a bit a convoluted topic, but today there's nothing that is stopping a miner from creating some fake transactions or some extra transactions, because if they do this and they mine the block themselves, all the transaction fee just goes to themselves. So it looks like they're paying a lot of gas, but actually it's just going from one of their wallets to another of their wallets, and so they have not spent any money. But now if we have burden of a gas fee, then even if they try to do some kind of manipulation like this, they're going to lose money. And so it becomes much more expensive for miners to do manipulation. So that's like all the good stuff. Let's talk a bit about the bad. And I connotated that a bit in the beginning, but let's go here. So the bad is the base fee is a tax, really. It's a tax on top of what we're doing right now. And the term tax is the term I use for that, because everybody has to pay it, and it's not adding, it's not going to go into anybody's wallet, so it's really gone. And to show that as an example, so today, pre-EIP 159, we have like this working together between the user who's trying to send a transaction and spends gas on that, on the left-hand side, and then on the right-hand side, the miner, who has some cost of execution to do this transaction, that's the lower half here. But then all the rest that is not his cost of execution is just pure profit that he's taking home from executing your transaction. And so he's pretty happy with that. And the user, of course, doesn't like high prices, but there is like a certain level right now. Now, after EIP 1559, we know that we will have this base fee that is being burned. And this base fee is going to have some price based on the total volume of transactions right now, and it's going to cut off some of the profit of the miner, right? We pretty surely miners will not mine transactions if the money they make is less than their cost of execution. Now we hope that with EIP 1559 they're willing to give up some of their profit margin, so they're actually giving up some of the profit so that the base fee that we burn is not all paid by the user. But in the end, it's going to be from both sides. Like the user has to pay some of the base fee, and the miner will have to pay some of the base fee. Now, what this leveling will be, it might be that actually at the end, the user pays all of the base fee, or it might be that at the end that the miner is paying all of the base fee. We just don't know yet how this market is going to develop. And the really bad thing is that we don't have any formal proof on 1559 today. And the teams are actually running to try some simulations to see like what are the behaviors and what might happen and where will this equilibrium end up. But what is for sure, the prices will not go down. If at all, the prices will go up, like in the picture seen here, because we have the base fee on top and it's taken away basically from the mining profits. So that's why I would say this is actually a lose-lose situation, because for sure the user is going to pay more on average and the miner is getting less on average. So it's really like this tax. And this just to show like what impact, like what amount of money we're talking about here. So there's like two worlds. There's like the pre-DeFi world, and then there's the post-DeFi world in which we live right now. And in the pre-DeFi world, we had actually the block rewards being very large, just the Ethereum you get from making the block, and the money you made from the transaction was very, very low. Like in this case, here, this block, it's just 0.1 Ether that we got from that. So it's like a total of $800 in today's Ethereum value. And most of that is from the block reward. So transactions weren't that important. But now, today, in this DeFi world, where there's so many transactions and everybody is trying to do arbitrage, the fees collected from transactions are actually much higher. They're in fact, right now, if you look at the history of blocks, they're actually much bigger than the block reward. Not even, but much bigger. And so if we're talking now about introducing this kind of tax just on the transaction fees, the money at risk that potentially goes into this tax that is potentially burned is like a huge amount of money. And so if you imagine that from a miner's perspective, you're now talking about like, well, we're going to take away maybe $1,000 from you, maybe $2,000 from you, but like a huge chunk of like the total value of a single block. So that is going to create like frustration, at least, let's put it this way. And then there's some risks that we know from this EIP by itself. So the first risk is like a technical risk, the 2x size blocks. So these are good for the users, but we actually don't know today if they can be transmitted through the network. Like, will this create more network delays? Will we have a higher monthly rate? And so this is something that the gas team and the parity team are looking into now. And they try to simulate networks with like constantly high block sizes. This first reason is actually the primary reason why this EIP is being delayed, because there needs to be more time to run these tests. Then the implementation is actually quite complex because we have like two transaction pools. We have like the new EIP 1559 transaction pool, and we have the existing transaction pool. And so they both will coexist for a migration time period. And so all the clients implementing this, they will have to be aware of the two transaction fees because they work differently. They one have base fees and tips, and the other ones don't. They're just the classic transactions. And on top of that, like all wallet providers that we have today, like MetaMask and Ledger and any of those, they will have to migrate as well to the new transaction format. So that's an implementation issue. And the miners, we just talked about that. So they will have lower revenue per block, obviously, and they will also have a harder time to earn incentives from within the blocks, like from injecting their own transactions, from arbitraging themselves, because now they're burning money. So we don't know how much that is, but there's some estimations that actually the amount of money they can make just from deciding which transactions are in the block is not insignificant. It's just really hard to measure if you're not a miner yourself. And then the last problem is this price equilibrium that we just don't know where it's going to end up. Like how large is the base fee going to be, and who's going to pay it for it? We just don't know. So let's talk about the some of the ugly here, and that is this topic. So we're going back to this. So at the end of the day, this EIP is going to fix the smooth curve, and we're not going to have high variations in gas price, but the average gas price is not going to go down. If at all, it's going to jump a bit. And that is like the biggest misunderstanding. There's a really good video and also some slides on that. Just if you're curious about that topic, there's a really good explanation of that and what the development teams are thinking about it right now. The second problem is, and that's like this initial paper that Peter was talking about and that I was talking about. This is in-protocol collusion. So the amount of transactions in a block is actually not something that is based on consensus, right? It's a miner who decides I could mine 0 transactions, or I could mine 10 million transactions, and with EIP 1559 I can mine up to 20 million of gas of transactions. And so this idea of in-protocol collusion that came up from a paper that is from the Princeton University, the idea was that actually there can be strategies for miners to not always do like full transactions, but half full, not full blocks with transactions, but half full blocks. And it's going to be better for them in the long run because the gas fees are actually going up. And this is something that Vitalik tweeted about, like that he hopes, or that he thinks that with 1559, this is the risk from this is going down. And that was something that really I was super curious about, because I got the feeling, and that's something that I want to talk about, that actually the risk with EIP 1559 is going up, that miners are colluding to do some of that and not to fill blocks always. And the reason for that is really the money they make. So let's look at the idea of this paper. Just go back to this paper that Vitalik was referring to here. Now, the idea of this paper is that if you are a miner and you make the first block, you have the option to either say, like, I take all the transactions, or I don't only take half the transactions. And if you do that, if you only take half the transactions, that creates an incentive for the next miner. And that's actually what we see up depicted here. Like the one miner who's following, in the upper picture, there's like 100 transactions being mined. And so there's nothing left in the pool. Like all the money, all the fees from those transactions are collected by that miner. And so the next miner only gets like 5 transactions. And in the other picture below, the miner is actually deciding to make this fork block that has only 55 transactions. And so there's still money on the table. There's still money on the inside the transaction pool. And so that creates an incentive for the next miner, not the miner of this block, but the next miner, not to follow the full block, but to follow the half block, because then he's actually just making more money if he's following the half block. That's a core idea of this. And if we know like the distribution of miners today in Ethereum, there's actually like a very few huge players. So Spark Pool, Ethermine, F2 Pool, and nowadays Zizotop. They have like a very large leverage on the whole network just because they're making so many of the blocks. So if some of those follow the strategy, it will already be effective. It doesn't need to be all of them at all. It just needs to be like a small fraction of them. And this is just to show, like this is from misunderstanding. You can check it today. I didn't check it today, but there you can see the blocks being mined full. And also this is showing we see this very high reward. So it's like 6, 7, 6, 5. So this is all from extra transaction fees, because we know the base, the block reward just for making blocks, only 2. And we also see that just by accident, sometimes there's empty blocks. Like here down, we have one from Zizotop, and that block is basically empty. And so because it's empty, they are only making 2.4 Ether. But the result of mining an empty block is that the following block is even fuller, because they didn't mine anything, but the transaction pool has higher value transactions in it. And so that's the idea that we see here. And with EIP 1559, that incentive becomes even larger, especially like with this DeFi market right now. Because if somebody, like if we take away like the 20 million gas, we do this extra large block, and we take all the high value transactions and mine them, then for the next guy, there's no high value transactions left anymore, right? And so the next guy, when he has the option to say, well, there's one block that mines all the high transactions, and there's another block that only mines half of the transactions, then in one block, following one block, you would make 2,700 if you follow the half full one. But if you follow the full one, you only make $800, right? So you choose, you want 800 or you want 2,700. It's up to you to choose. And if you follow like the money, you will follow the lower picture, and that means you will effectively follow the collusion. Now this collusion, and that's what I'm saying here, is actually a win-win situation for everybody in this case. Because what this collusion does in EIP 1559 is we're shrinking the blocks down to half, and then the base fee, as we talk about, the base fee is always being adjusted when the block is fuller than half, like fuller than 10 million, it's growing and we burn more. But if the block is less filled than half, like less than 10 million, the base fee is going down and less is being burned. And so this is like a win-win, because now the next miner, he's actually making more money because there's more transactions left. But also he's reducing the burned amount of money on each of these transactions. And so
它这个 base
that
fee 是
means
先
that
的，
for him as a miner in the long term, he's going to make more money because this burn rate is just going to maybe zero. And also no user has to pay the tax. And so if everyone does this eventually, if all miners realize this is better for them because they make more money, and so they always follow the half full blocks, then the effect would be that nobody has to pay the tax, so happy miners. But it also means that the base fee is going to stay zero forever. And then we don't get this smooth curve of the volatility. And so this is, I think, the core problem with the economical incentives of the EIP 1559 and how it relates to this paper. So what are other options? And we talked about that in the Ethereum Magicians debate, and this is how I think I came to this talk also because I was talking about this in the Ethereum Magicians debate. There is, I wanted to put the diet logo here. There's another option, and it's called the fee pool, and this is something we have implemented and I want to talk about that. And it's an idea that actually has been going on. So the idea of the fee pool is that we basically follow the same 1559 rules. The difference is the base fee, we don't burn that. And so instead of burning the base fee, we just apply it as a minimum fee so that everyone who's submitting a transaction at least has to pay this amount of fee. And then everyone transmitting this transaction is spending the gas not directly to the miner, but to a fee pool. And so this fee pool is like from block to block, it's filling up. And every block that is being mined, the miner gets like 10% exactly of this fee pool. And so the idea here is that roughly a miner gets like a cut of the last, like the average of the last 10 transactions roughly. It's not quite an average, but because he's getting 10% of that, it corresponds to like a tenth of 10 blocks, roughly speaking. And that is being removed from the pool again. So the pool is really like an account. It gets transactions in, takes the gas, and then it takes it out again, and that goes to the miner. Now that has quite a couple of improvements. One is one big one is actually it's simpler to implement because we don't need to update wallets and we don't need to have like two queues of transactions. It's just the same transactions as today. The only rule we add is that there is a minimum fee now. Now this minimum fee grows in the same way as a base fee, and that creates actually an incentive for the miners to create always full blocks, and I want to talk about that. So we look back at this picture as like the full block and the half full block alternative, but now if you would have a fee pool. And so if you look at the full block up here, so if you're the miner and you decide, do I want to follow the full blocks, or do I want to follow the half full blocks? If you follow the full blocks at the top, even if your next block is like relatively empty, like all the really high value transactions have been mined, you still make a ton of money from the gas because you're participating in all the gas from the 10 previous blocks because of the pool, right? So let's say all the blocks before were filled, like 100% filled here. In EIP 1559, that means we have 20 million gas in 9 blocks, and that went into the pool. And now from our block, let's say they only like 1 million gas went into that block because our block was not very full.
Hello, yeah. So I'm gonna cut in right now because we are a bit running. We're running a bit late. So I have a few questions for Dominick concerning this topic.
It's actually my last slide, so it's fine.
Oh, that's the last slide. Cool. All right.
So I was
CC had a few questions.
I was about to ask why you are very interested to this topic, but then I realized you have your own proposal for the fee pool, and I realized that's very interesting.
He wanted to ask why this topic especially interests you.
I think.
Sorry.
Yeah, go ahead.
Yeah, I can talk about that. Like one thing that we're trying to do with Diet is actually we want to stay Ethereum compatible, right? I think that's like really a strong point for us, and we want to ensure, of course, that these fee markets work well. And so we're following the development of Ethereum all the time. And this change, I think, is practically like pretty dangerous, I think, if implemented right now. And also like the implementation efforts like on the whole ecosystem is pretty big because of the incompatible change of the transaction that all the wallets have to upgrade. And so like everything has to upgrade for, I think, something that might be actually pretty dangerous in terms of colluding. And so this is why we're pretty curious about what this change. And of course, it is a necessary change to some perspective, because the volatility is really like a big problem that needs to be fixed.
I appreciate your time, Dominic. We are going to end right now, and I would like to invite everyone who participated in this event to sign up to our next event, which is 8th of October. We're going to have Vitalik Buterin and a few other Ethereum researchers to our next event. And also, CC will be talking about gas golfing on 15th of October. Barnabas is also going to discuss a few projects that he has been working on. So I encourage right now to sign up Taipei Ethereum Meetup.com Meetup events page on meetup.com. So appreciate everyone's time, and I will see you next event.
Yeah,
Bye-bye.
Thank
Bye-bye,
you very
Dominic.
much, Dominic.
Thank you, guys.
Thanks very much.
Thanks, Dominic.